with Mitch.
Hi everyone, it's time for a Minute with Mitch. As we come up on July, we're in the last 6 months of 2025. Who would believe time is flying this quickly? But as you remember, people that are age 73 and above, and previously, before the law changed to age 73, are already taking required minimum distributions from their IRA. We've got to start thinking about the RMDs for the remainder of 2025. Now, as you know, you're required to take out a certain amount of your IRA based on your age and your life expectancy, which is an IRS table. They tell the custodian knows exactly how much you have to take out, and we get that information from the custodian where your money is held, and we talk to you about some strategies, how much we need to take out over, do we want to wait the rest of the year, do we want to take it out monthly? You have many, many, many options. But we start to think about that now, and we're starting to gather all the data of the people that have not needed to take out their RMDs. We like to let it grow as much as we can through the year because it's still growing tax deferred, and once we take it out, you now have that money. So as we get into really September, October, we're going to start contacting, or we would start contacting clients about their RMDs, required minimum distributions, out of your IRA. Also, so you know, there's qualified distributions if you would like to save some taxes, because when money comes out of your RMD, you have to pay tax on it. You're required to pay tax on it, ordinary income. But if you're 73 and above and you have to take money out, you can send up to $100,000 to qualified charities and not pay taxes. It goes directly from the custodian, then directly to the charity. You can't touch that money. And whatever portion you take out does count as a qualified distribution from your RMD. Because it goes to charity, you don't pay tax on it, but you can't touch the money, and you do not get a tax deduction either. For example, say you have a $10,000 minimum distribution and you want to give a charity $5,000, you could send $5,000 directly to the charity, and you won't get hit with a tax consequence, and you could take $5,000 out for yourself, which you will pay taxes on. So there are a lot of options. Talk to your advisors about it. But again, we are in the second half, getting into the second half of the year, and the RMDs are going to be looked at and making arrangements to start taking them out sometime around September, because it is required by December 31st, 2025. Thanks again. Happy days.
1 minute with Mitch.